it's likely that the regulators are going to apply regulatory oversight to the DeFi exchanges, to all the exchanges that handle all those tokens, and to all the developer groups that actually handle them. So I think that there's two markets here. There's a crypto market, which is really a tech VC market. And that's the ETH, Solana, Cardano, Binance, Smart Chain, fill in the blank. What their best hope is that one of them or some of them can dematerialize the banking and the exchange segment of the economy. Like they dematerialize JP Morgan or NASDAQ or New York Stock Exchange. And it's looking increasingly like Binance and Coinbase are going to are the competitor to NASDAQ and New York Stock Exchange, more so than the DeFis, in my opinion. But the crypto sector is all about dematerializing applications and banking, and it's a fintech play. On the other end, Bitcoin and digital property is about dematerializing gold, commodities, and demonetizing property and buildings and land and real estate and ultimately money. And if you want to look at the two of them, right? If you want to demonetize property, you want something which is industrial strength and will last forever, and that's a proof of work network. You want real money with real energy will provide you real security. And the closest competitor to that is Bitcoin Cash, Brett, and it's 1% of Bitcoin going to zero. I mean, it's a disastrous joke. Ethereum is sitting in the middle because they're trying to migrate from proof of work to proof of stake, but clearly their future is in proof of stake. And proof of stake is a necessary technology to try to get the speed and the performance to be an exchange. That's why they're doing it. But, you know, that entire, that addressable market is the next generation fintech market. And you will compete with JP Morgan and Square and PayPal and Coinbase and Binance and Citadel, high-speed trading, and they'll all compete with each other. And Solana will compete with Cardano, will compete with Binance Smart Chain, will compete with ETH. And so ultimately, you've got execution risk, you've got competition risk, you've got all manner of regulatory risk. How many different ways can the thing fail? Like, would you move to a country that told you they were going to disband their military and their law enforcement next year, but it should work out well? Because that's the Ethereum value proposition right now, right? You don't know how the proof of stake thing is going to work. You don't know. If you read the president's working committee report this week, you know that there's active review of all the DeFi protocols, at the administration level. And the writing is on the wall. It's pretty clear. Most of them are securities. Others are commodities and derivatives. It's likely that the regulators are going to apply regulatory oversight to the DeFi exchanges, to all the exchanges that handle all those tokens, and to all the developer groups that actually handle them. Does it pass the MicroStrategy test? Well, the MicroStrategy test is for an institutional investor. It's not for a VC. It's not for an individual speculator. If you're an institutional investor, will it be banned? Will it be copied? Will it be hacked? And the answer for Bitcoin is no, no, no. The answer for everything else is they're going to get banned. They're already copied. There's like 48 dog coins in there's 10 Elon Musk coins. There's 2 Saylor coins. They're getting copied every hour, right? And will they be hacked? They get hacked every week. There's a massive amount of uncertainty and risk that you're taking on there. And those things are not robbing liquidity from Bitcoin if you understand why you're buying Bitcoin. You're buying Bitcoin because you don't want to monetize real estate in Canada. And you don't want to put your money in the S&P index, and you don't want to hold gold, and you go borrow $10 billion and buy $10 billion of Bitcoin, right? And lock in that trade. That's something you would do with something that was bulletproof. You're not going to go borrow $10 billion to buy Shiba coin and lock in that trade. Those are different things, right? In the spectrum, you've got the savers. The savers are going to convert a weak asset to a strong asset. That's like taking pesos and converting it to dollars, and taking dollars and converting it to Bitcoin. That's a saver. The investor strategy is I take portfolios of risk. I'm going to bet on Apple versus Google versus JP Morgan versus Ethereum versus Solana. as technologies and which technology wins. The traders are trading portfolios of risk derivatives and yield curves, and they think that this will move in line with that. And the speculators, they're in it for Shiba bow wow, right? And this is up and that's down, right? And the meme coins, and it's all good fun and it's entertaining. I would say the crypto world is, it's got all of those classes of players in it jumbled together. And probably the most important thing for an investor is figure out, are you an institutional investor? Are you a saver? Are you a tech VC? Are you a gambler? Are you a trader? If you're a trader and you're fixated upon trading SHIB versus Doge versus Solana versus Cardano, maybe there's something there, but I'm not going to stand up in front of 1 billion people and tell them that the solution to their monetary problems is mastering trading or mastering speculation. And in fact, Brett, the fundamental theme here is I don't even think it's wise to be betting on Apple versus Amazon versus Facebook versus Google versus Microsoft. The whole point of this is there's massive amounts of investment risk. Buying Exxon or British Petroleum, you could buy a $100 billion blue chip, 50-year-old, 100-year-old company. It's still got massive risk because of regulatory intervention and tariff and trade and execution. So the point of Bitcoin is to go to the far left end of the risk curve. I don't want to take any of that risk. And the point of a lot of the cryptos is to go to the far right end of the risk curve, where you're taking so much risk, you don't even realize the risk you're taking, right? I think the regulators have strongly implied, Brett, that just about every single thing trading in the space is a security other than Bitcoin. Gensler was asked point blank in congressional testimony, is ETH and Bitcoin property? He looked at the questioner, he refused to answer. He said, I'm not going to speculate on an individual token, but if your token, if a token had an ICO related to it, and there's a group of people, then it looks like an investment contract or an investment company. He strongly implied that ETH is a security along with everything else. And so I just don't think in good conscience, any responsible institutional investor can hold anything in the crypto ecosystem other than Bitcoin. It's the only truly decentralized commodity. Everything else is a risk. You take it at your own peril, and what'll happen? I don't know what'll happen.